Everyone is telling you the party's over, that the crypto bull run has finally hit a wall, and as you watch the markets bleed red and investors dump their bags, the fear is palpable. You can feel it in the headlines, see it on the charts, and hear it in the voices of so-called experts calling for the end. But what if they're wrong? What if all this panic is just noise, distracting you from what's really happening behind the scenes? We've spent the last week digging through on-chain data, analyzing institutional moves, and looking at the big picture, and we've found three key signals the mainstream is completely ignoring. These signals suggest that the biggest, most explosive moves of this cycle are still ahead of us. So, before you think about selling a single Satoshi, you need to see this. Let's be real. The market looks scary right now. After hitting a thrilling all-time high of over $126,000 in early October, Bitcoin saw a sharp correction, and when the king bleeds, the whole kingdom feels it. The entire market has been consolidating, and the volatility has been gut-wrenching. We've seen massive liquidations, with over $217 million in leverage positions wiped out in just 24 hours on one occasion, forcing a cascade of selling. The headlines are fanning the flames of FUD, fear, uncertainty, and doubt. You're seeing respected analysts like John Glover at Ledden warning of a potential bear market that could last until late 2026. He's pointing to chart patterns that suggest the run is complete, with predictions of Bitcoin dropping to between $70,000 and $80,000. This creates a brutal psychological storm. Your friends who were asking what to buy a few weeks ago are now asking if they should sell everything. You see your portfolio in the red, and your conviction starts to waver. This is peak pain. It's the moment when retail investors, driven by emotion, tend to give up and sell at a loss, just as the smart money begins to buy. On-chain data shows that while smaller investors have been selling, large-scale holders, or whales, have been strategically buying these dips. But this is where the story splits. Because while the crowd is panicking, the data is telling a very different story. First things first, throw out the old rulebook. Many analysts are stuck comparing this cycle to 2017 or 2021 using the old 4-year cycle theory. By that logic, we should be winding down. But that's a dangerously simplistic view. The market has fundamentally changed. The biggest game changer? The spot Bitcoin ETFs. This isn't just another narrative, it's a structural shift in the market. We're not just talking about retail hype anymore. We are talking about Wall Street-level institutional adoption. Asset management giants like BlackRock have entered the arena, and their impact is staggering. In 2025 alone, Bitcoin funds have seen year-to-date inflows of over $30 billion. Just last week, Bitcoin investment products pulled in another $931 million. This creates a constant, daily fire hose of new capital buying up Bitcoin, a level of demand that simply didn't exist in previous cycles. BlackRock's iShares Bitcoin Trust, IBIT, has been a dominant force, responsible for a massive portion of the net inflows for US Bitcoin ETFs this year. This institutional buying power creates a much stronger price floor and reduces the likelihood of the 80–90% crashes we saw in the past. On top of that, this cycle hasn't had that classic blow-off top, the euphoric, crazy hype phase that marked previous peaks. Instead, we've seen a steadier climb. This doesn't look like an ending. It looks like the market is just catching its breath before the next major leg up. If you want to know where the market is really headed, don't listen to the panicking masses. Watch what the whales are doing. And the whales, the individuals and institutions holding 1,000 BTC or more, aren't selling. They're buying. On-chain data from sources like CryptoQuant and Glassnode is crystal clear on this. During these periods of retail sell-offs, whales have been in a phase of strategic accumulation. They are using the market's fear as their entry point. But it's not just the whales. Let's talk about global liquidity, which is the total amount of capital flowing through the world's financial system. Historically, global liquidity has a strong correlation with crypto. When there's more money sloshing around, risk-on assets like crypto do exceptionally well. Recent analysis shows global liquidity is on the rise, a trend that often signals a bullish crypto rally. While sentiment might feel grim today, the underlying financial currents are turning bullish, pointing towards a market that could push the total crypto market cap well past the $4 trillion mark. So while retail is selling based on fear, the smart money, both the whales and the broader financial system, is signaling that they're getting ready for a big move up. They're making calculated chess moves while the rest of the market is frantically flipping the board. I know this is a lot to take in. We're covering deep-level data you won't hear on the news. If you want to stay ahead of these trends, understand what the on-chain data is saying week by week, and get insights into the narratives that will define this bull run, do yourself a favor and hit that subscribe button. And make sure you ring the notification bell so you don't miss our next video where we'll break down the specific altcoins poised to outperform. Understanding that the bull run isn't over is only half the battle. The other half is knowing where the next wave of growth will come from. In crypto, money flows in waves, driven by powerful stories or narratives, and two major narratives are already building steam for 2026. The first is the tokenization of real-world assets, or RWAs. This means taking physical assets like real estate, stocks, or art and putting them on the blockchain. Imagine buying and selling a fraction of a skyscraper or a Picasso instantly with anyone in the world. Financial giants are already working hard on this, and it represents a multi-trillion-dollar opportunity that will bring a tidal wave of value on-chain. The second, more immediate narrative is the coming altcoin season. The crypto market cycle usually follows a pattern. First, Bitcoin moves and sucks up all the capital. Then, once Bitcoin stabilizes, that money starts flowing down into major altcoins like Ethereum, and then into smaller projects. We're already seeing hints of this. Ethereum has shown incredible strength, and with the launch of its own ETFs, some analysts are floating targets as high as $15,000 before the end of 2025. Beyond Ethereum, you have ecosystems like Solana, known for its high speed, and a host of Layer 2 solutions like Arbitrum, building the next generation of apps. The next phase of this bull run won't just be about Bitcoin. It will be about the explosion of innovation happening everywhere else. So, what's the bottom line? Is the crypto bull run truly over? While the market is flashing warning signs that have caused widespread fear, the underlying data tells a different story. This isn't 2017. The entry of institutional giants through Bitcoin ETFs has fundamentally changed the game, providing a floor of demand we've never seen before. The smart money isn't selling, they are actively buying these dips, signaling their confidence. And the macro environment, with rising global liquidity, is creating the perfect fuel for the next leg up. Some analysts are still calling for a drop, perhaps to the $70,000 to $80,000 range for Bitcoin, and that might happen. But based on the evidence, a dip like that shouldn't be seen as the end. It should be seen as the exact opportunity the smart money is already seizing. The bull run isn't over, it's reloading. The price predictions from credible analysts for this cycle's peak aren't just hitting $150,000 or $200,000. Some of the wilder forecasts even range as high as $330,000 for Bitcoin. The most emotional, fearful moments in a bull market are often the points of maximum opportunity. The herd is selling out of panic, but the people who look at the data and understand the fundamental shifts in this market will be the ones who are rewarded. The smart money is accumulating now. The question is, will you?